first and foremost, we're going to talk about the trend trading strategy. And I'm just going to go right ahead and choose any random one. I'm going to go here to choose the Eath RSI 60/40 crossover set. So before we even break down what this set does or what it's comprised of, I'm just going to scroll down here to management strategy right here, management strategy. And as you can see, it is a trend trading strategy. Oops. And what a trend trading strategy is, it utilizes popular trading indicators such as moving averages, the relative strength index, awesome oscillator, and many more. And it allows the set to rebalance when it is triggered during a bullish or bearish trend, right? So we're going to go back and check out the 60/40 RSI crossover. So what does this set in particular do, or does, I'm sorry. So the Eath RSI 60/40 automatically triggers rebalances if the relative strength index, or RSI, crosses below support or above resistance to indicate the price momentum. Awesome. But what the heck does that mean? So if we want to read a little bit further, it says if the Eath RSI falls below support at 40 in an existing uptrend, the Eath RSI 60/40 rebalances Eath into cash, or USDC. So now we understand the two underlying assets. It's Eath and a stable coin, which is USDC in this case. So let's read on a little bit more. If the Eath RSI breaks above resistance at 60 in an existing downtrend, Eath RSI 60/40 rebalances into Eath. All right, awesome. So now we have two extremes, right? And that's exactly what an RSI oscillator operates on. It has two extremes. One is the higher, which is 70 usually, or in this case it's 60. And there's a lower extreme, which is 30, but in this particular manner, it is 40. So what do these numbers mean? So 60 for this 60/40 set means that the asset, Eath, is overbought or overvalued. When it goes below the 40, it means that it is oversold and undervalued. So that means that if it's going below a 40, that means that we're probably in a very bearish trend right now. We want to hedge any more risk, any more losses. So we're gonna sell, and we're gonna try to sell it as fast as possible to prevent any more losses. And vice versa. If it breaks above a 60, we want to flip our USDC, our stable coin, into Eath as fast as possible so we could catch this price appreciation, right? So we're gonna go into one more. We're gonna go into one more trend trading set. And this time I'm going to go to the Eath 60/40 yield set. So it abides by the same trading strategy, so there's no need to explain it any further. But the main difference here is that instead of USDC, this set uses compound USDC. So now we have an interest-bearing asset. So again, if it goes below a 40, it's going to convert your Eath into CUSDC, and if it goes above a 60, it converts your CUSDC to Eath. But now the only difference is that when it's converted into CUSDC, you're earning interest. And in this case, you're earning a 0.52% APR while your money is in CUSDC. So not a bad deal, right? Not a bad deal at all. And now at the moment, this particular set is priced at $218.35. It's performed above market trend at a 35% over performance, and it's completely in wrapped ETH or Ethereum, right? So that is the trend trading strategy.